following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
All right, we are back, folks. Let's talk futures, Traders Workshop, all combined. I'm going to bring in my favorite guest of all time, Anthony Drager, Edge Trading Group. Anthony, how are you?
Good, Jim. I'm moving up, I guess.
You were second place a little while ago. Now you're first place.
Well, you haven't cracked the top 10, but you're closing in.
At least as long as I'm still on the list, I'm happy.
No, you're not even on the list. So let me revise that. You're close to being on the list.
I'm going to work harder, man. I'm going to work harder.
Might be a good idea. No, I'm doing good, Jim. How about yourself?
Pretty good. Pretty good. You know, looking forward to the holidays. It seems like volume's kind of like slowed down a little bit.
You know what's interesting is it was very low a few days last week. It was low this morning coming in. And then we actually get in the last 45 minutes in the SP, and you could see it. And this is what's important is you got to manage your expectations so you're not forcing, but you also know that if you get a move and you're not on it, hey, that's going to happen. Don't try to force it because you missed it. And a lot of people, just human nature, like if you didn't get short in this move down the last 30 minutes, you're probably mad, angry. And the only way you should kind of be upset by missing a move is if your strategy had you taking it, and for some reason, fear or something else talked you out of it. Then you maybe should be upset with yourself. But if you weren't supposed to catch this move, like you weren't bearish looking for a downside breakout, you have nothing to be mad about. And then the next thing is you force the next trade. So you missed the good move, and you take the bad side of it, trying to force something out of nothing. So, but this came out of nowhere.
I've been doing this for decades, and when I say there's always going to be another move in a market tomorrow or the next day or the day after or in a different market, there always is. You're not missing anything.
No, you're not. And you know, working in a prop firm for as long as I did, the owner was real smart, and he would tell us once in a while, listen, he goes, everybody, we're trading everything. We're trading these markets. We're trading our outside stresses and relationships and problems. And if you trade, you know, inside what you're trading outside, you're going to be in trouble. So you can't worry about what you miss because, like you said, it just hits the refresh button. And then he would say something like, you know, yesterday we had a nice trend day lower, and everybody is mad they missed the trend day lower yesterday. So they're going to come in being like, I'm not going to miss it today. And then today we don't get it because everyone's looking to get it. But that made me think, like, some of the best education I got was desk-to-desk banter. Being in a prop firm, being around traders, or lunchroom conversations. It wasn't some structured event where we're going to learn for 45 minutes and we're going to cover this and we're going to cover that. In trading, if you're around good people, you're going to keep just continuing to learn. As long as you're learning the right stuff and the conversations are relevant to what actually moves price. And most people.
So I learned more back in 1982. By going to the Snuggery. Remember the Snuggery on Division Street? It was a bar.
I do, yeah. But you're older than me.
I am. I'm older than most people. But we would, you know, the bond traders would come in the morning, 7:20. They do their thing. And by, 9 o'clock, 9:30, 10:30, made their money. They're tired. Let's go home. No, let's not go home. Let's go to the Snuggery. We know the lady who opens it up. We'll go in there and play some pinball or some games and drink some beers, which might sound a little odd because it was early in the morning, but I don't work there usually. But that's what the traders did from the bond pit back then. And you would have 5, 6, 7, 8 guys sitting around talking about, oh, what did you see what Baldwin did? Blah, blah, blah. Did you see that? Did you see this? And that's when you learn.
And then they go back and trade the close, maybe the last hour, 1 to 2. It's still closed at 2 o'clock. Think about those hours. When I had to stick around my first introduction to the floor, it was a summer job. 17, 18 years old, and I'm on the floor, And if we had to stay for the S&P close was 315, it felt like it was double overtime because we traded.
Yeah.
I was a runner for the meats. Well, they closed at one, I think it was 115 or something. They always
Yeah.
had short hours, and those old guys never changed it. Their hours were whatever. The grains and the
Yeah.
meats always had 9 to 1 or something.
Yeah.
And the
Yeah.
powers that be always wanted to change it and make them longer. And those older guys says, nope, 9 to 1, and they remain the same in the grains and the meats. Now,
Yeah.
one thing that I think will help viewers that come in and they're looking for kind of like what they could pick up, and you're this live event, this podcast you guys do is kind of part of that, where if you sit down and try to like, what am I going to learn from this viewer or that? I think that what's important are things that click for you. Like even in conversations I have with myself, I think about like why price does what it does, and that's what we're predicting, right? We're trying to predict where price is going to go next. But it made me think what we're really trying to predict even before that, Jim, is where are the buyers and sellers going to show up and not necessarily get filled, but want to get filled. Like we're honestly trying to predict future buyers and sellers. Because if you had a little bird on your shoulder and a little bird said, hey, there's going to be a 2,000 lot buy market order that comes in 3 seconds, you know, it would probably rally. It's going to spike the S&P 3 or 4 points, right?
Yeah.
And you wouldn't have to learn anything else because you were just told where the next future buying is going to come in, and it's a big one, right? And so people got to think like you're trying to predict, but you're not. You're trying to you know exactly what the heck you're trying to predict, and most people don't, and they get confused with all the inputs that goes into price going up or price going down. And they really got to walk it back to understanding like if future buyers are coming in, that's a bullish that starts to put yourself in a position to time your location. And a lot of people don't get to that. And I don't know, I just think that there's a lot of daylight between what people are trying to do, and they never actually get themselves on the right path to give them their best chance at that. And
Well,
I'm
and there's
guilty
a
as charged. I'm sorry, go ahead.
no, but there's a fine line between trying between being reactive and being predictive, right? There's a line between there that sometimes gets a little bit foggy.
Well, here's the thing. When I started my career on the floor, I was guilty of taking education that didn't matter, cost good money. It was irrelevant, but I didn't know that. And so now people have all this information with the internet at their fingertips. And so there is a lot of, flashing lights to attract you to this is important or that's important.
Yeah.
It's gotta be some things that are like, why didn't I think of that? Or that clicks, that's indisputable. Like here's what's not disputed. It takes more buyers than sellers for the price of anything to go up. So you've got to start thinking, where am I going to get tools that help create probabilities that predict when the buying is going to come in? The example is a 2,000 lot buy order. All right. So we can't get that. We're not going to have that little bird that says, hey, 2,000 buyers are coming in. But if you put yourself in a position to kind of follow the herd from a helicopter, and the herd are the longs and shorts, right? And when you see that herd get to an edge of a cliff, that's when the market might be getting too short. What does that mean? Well, too many shorts, too many buyers that have to come in. Now you start to predict that your obligation is to put yourself in a position to say, does this tool give me the opportunity to predict more buyers than sellers? And all of a sudden you're like, yes, it does. Now it's a tool worth chasing. But if it doesn't come down and answer that simple question, then you're probably going down a rabbit hole. You've got to predict future buyers and sellers. And guess what? When people see buyers that already come in, they're not as important because they've been filled. If I stick my hand and someone shakes it, that's a buy order getting filled by sellers, right? There's an agreement there. But the discovery process is when buyers reach out and they don't have anybody's hand to shake. And now that imbalancer, well, I want to buy it at 2. You can't. How about 3? How about 4? And now that's the anatomy of a rally. So what is it you're trying to do? Find where future buyers are going to step in. And if it gets stuck, if people get stuck in a position and that position is short, and a lot of them are stuck, they're the buyers that you're trying to predict, for crying out loud. And that's the way you have to think about it. I don't know. I guess I'm never surprised at all the conversations I have with people that come in and invest in the education I offer and the charts that we offer. Um, I've never heard it explained that way, is generally the reaction. They came because they never heard anywhere where, yeah, after you're short, you do become a buyer to cover that short position.
Yeah.
And if that's what we're trying to predict, buyers and sellers, then it makes sense to follow other people's positions. Like right in here, I'm
Yeah.
trying to.
I'm looking at the S&P chart again. Let's
You're
pull
not going
that
to
up.
see it on your charts, but we have what we call lasers, which is always taking the last 2 minutes, the shorts that we are able to tag as short versus longs, because there's always longs and shorts in the market. But when there are more shorts than longs, we have a laser we call go red, indicating there are more shorts than longs. And that's what we were getting down in here in this 66, 68 area. And that doesn't mean buy it, put your feet up, life is good, but it starts to give you the opportunity to time your decisions, your ideas. If you're looking to cover a short, you're looking for too many shorts that come in behind you and are late. And then that's going to give you a better opportunity to cover your short in a better position. So you're not short with all this money in the trade, and then it rallies 5 points in your face, and you're like, all right, I'm still up in the trade, but that's not how you're going to feel. If it rallies 5, 7 points in your face, you're going to feel like you lost 5 or 7 points. So you always got to work on your timing more than your opinion. You know what's a good exercise if we go into slower markets the last few weeks of the year, for people to do, is it's stressful. And when we talk about step one of a trading strategy, when you put your opinion out there, it's stressful to be wrong, right? And so strip that out. And this is just on sim. I wouldn't do this with live money, but on sim, strip out the first stage or the first step in any strategy, and that is bullish or bearish, up or down. Just play it from one side. You're going to play it from the long side for the entire session. And your job is to fight for locations that will not only get you long in a good spot, it rallies, you take profit, but also take losers. But when you take that first step in anybody's strategy, is it going up or is it going down? If you take that out of the equation, now you don't have to worry about being wrong and all the negative baggage that comes with that. Because don't kid yourself, being wrong, failing to admit and being good at admitting you're wrong keeps people in trades longer than it should.
Yeah.
And all of a sudden, they've got the biggest loser that they've had all week or all month, or one trade takes away 10 winners, all because of the stubbornness to admit. It's hard to admit you're wrong, period. It's just some people are better at it than others, but most people are really bad at admitting they're wrong. Well, as an exercise, take that part out of it. Just play from the long side all session long, obviously on sim, and work your butt off at finding good locations. And what's the definition of a good location? Having a trade go your way as soon as possible. Not necessarily do a full target or anything else, but taking a minimal amount of heat and having it start going your direction ASAP. So now you're playing on the right side of the trade. But I'm telling you, going into next year, if people aren't able to admit that, yes, it is hard to admit that I'm wrong. If you're not able to admit that, then I think you're like going up against human nature.
Yeah.
It's just like
Yeah. I mean,
being wrong sucks.
when we do our trade setup segment, we don't say, I'm going to put my stop here. We say, all right, what point am I wrong? Right here, I'm just coming up. I'm making something up. VWAP. All right, we're gonna if price comes back up the VWAP, I'm wrong. I'm gonna put my stop there. So that's a great point. But I want to kind of I want to examine this idea of, hey, let's just try to trade from the long side today. And a day like today, man, you would be, it's like a boot camp today, man. I mean, just after this sell off anyway, after 10 o'clock, you would have to be quick and nimble.
That's perfect. This would be a perfect day to to do that exercise where in the last 30 or 45 minutes we've been directional. If you get good at it, you can maybe make money and be dead wrong. That's the point. It's the opinion. The opinion doesn't matter. Location does. People got to get out of the head about being right. Oh, I told you it was going down. That doesn't mean I could have told you it was going up, be wrong, and made money. You were right and either lost money or didn't make money. So what are we talking about here? I don't care where price is going. I care when price is going. So yeah, a good exercise is actually fighting the trend and maybe not getting beaten up. Maybe you're up a little bit money or down an insignificant amount and you were dead wrong in direction. And you got to strip out the opinion. Now, the opinion's important. Don't get me wrong. In order to stack probabilities, you're in a better position to be, calling the right next side. So 45 minutes ago, if you were bearish, then everything after that will be a little easier, right? Because you didn't make the right directional call. So I'm not trying to dismiss that step one, your opinion, your idea. I'm not trying to dismiss how important that is, but just for a way to just strip out the emotion that everybody has, strip that out with an exercise, just fight for your location and be okay with being wrong because it should be insignificant for everybody watching. If your career is going to be made up of tens of thousands of trades, why would any one be that important? It shouldn't.
Yeah.
They're stupid trades. I always tell people, don't cheerlead for your trades. That was something we didn't stand for in a prop firm. Nobody would be like, yes, all right. That never actually happened because people would be admonished and they would be yelled at because it's not. Move on to the next trade. You shouldn't be cheerleading an idea because it's a stupid trade. All right.
Yeah.
When people stand up online and say, oh, I made that call, that doesn't matter to me. What matters to me is, do I have the skills to stack probabilities and fight for a good location? Because when is more important than where when we're talking about price.
Yeah. No, that makes sense. On a chart like this, though, when you see, all right, at 10 o'clock, we have this big sell off here. I don't know, 6, 7 candles. Go back to my commodity brokerage days where I was talking to traders around the world, 10 hours a day about their trades. I'd get this call every day. Let's just put my mouse here at 60.88. Hey, Jim, this is a big break. It can't go any lower. I'm going to get long. Then again, 10 minutes later, hey, Jim, this is a big break. It can't go any lower. I'm going to go long. And then again, oh, Jim, it can't go any lower. I want to go long. That idea, that mindset is probably wiped out more value than anything I've ever seen.
Adding to loser, essentially, right? Is what you're.
Yeah.
I mean,
or creating a loser.
Well, that goes back to people can't admit that they're wrong. Instead of saying, you know what, I bought, it's broke out. You don't have to reverse. I just knew where I was going to get out before I got in.
Yeah.
Now on to the next idea. But we're not going to make this trade important, and it's only important because they messed it up. And adding the losers is absolutely. I finally figured out the only way to help people stop adding to a loser. You know what that is? And I've tried different ways working with people and those who have that problem. And I think there's more than are willing to admit it. But I finally figured out what really helps people stop adding to a loser. You know what it is? They have to have a guy stand behind them with a baseball bat, bash them over the head every time they do it. That's the only way they're going to stop it. Or you have to you have to trick your mind as if that's going to happen. That's how awful that habit is.
Well, right, and it's the trader saying the market is incorrect. I'm right, the market's wrong. The market's never wrong. There's no such thing as a correction, right? I hate when people use the word correction. No, price went down. It's not correcting anything. It went down. And so the market's always right. This is a very efficient marketplace with a ton of volume, with institutional traders, all sorts of folks participating. It's not wrong.
It's never wrong, but it is cheap or expensive, or else it wouldn't move. Here's the best analogy. You and I agree to buy a house. You're going to sell me a house for $500,000. You and I shake hands, right? And so is it wrong that we agreed on 500,000? No. You're a seller, I'm a buyer. But then the bank comes in and says, no. We did our appraisals. This house is only worth 450,000. So you and I weren't wrong, but someone came in and repriced it. Our agreement on 500 was expensive, and it took a bank to come in to reprice it. So we weren't wrong by saying 500, but yet the correct, not correction, you could call it what you want. We had to reprice down to 450 because no bank would finance this property at 500. The same thing happens in the S&P minis, where you got people agreeing on price here at 75 even, but in 10 minutes, if we're down to 66 even, they weren't wrong, but it was expensive. And someone came in and had to reprice it based on all different kinds of factors. Strip down how many factors you're allowed or able to look at and keep it simple. But that's why price moves, because it gets overbought, oversold. Too many people are long. Too many people get short. They get stuck in the hold down at 66. All those buyers got to come in and they have to chase it up. Once enough of them chase it up, cover the short, and then all of a sudden we reach the top of that retracement, and then you got to work it back out to find a new imbalance. Markets don't move unless they go from balance to imbalance. And that's when we get sideways action. That's what you have. You have longs and shorts in the market. There's just not an imbalance of them. Until you get an imbalance of longs, let's say, then we could go down. Why? Because longs are sellers after they're long. Too many longs, too many sellers. Too many sellers, the price of anything is going to be inclined to go down. So yeah, markets are never wrong at this particular moment, but they do get cheap and they do get expensive and get overdone. And our job as traders are to find those areas that there's opportunity, that the price is going to reprice in 5 minutes, in 10 minutes, right? And have that plan. I think there's resistance up here at 75. Why? Well, because the average price of people who are long is 76, number one. So in the last hour, if you took all the longs that we are able to follow, the average price that they're long from is 76. It's generally great resistance, but that's not necessarily enough. When we get up here, I want to see a bunch of longs jump in and be wrong. They're looking for continuation to the upside. We use 76 as resistance. We look at a bunch of longs coming in, and then they provide the selling for price to go lower. And it's that quick progression that you have, because you're now following things that actually move the thing you're predicting. You're following things that move the thing you're predicting. And so it's like a meteorologist. Oh, I finally figured out looking at clouds is kind of important, or looking at wind direction might be important. Like, are you kidding me? So many people trade and they never get to a point where they ever give themselves a chance to make money or be successful, because they don't understand what moves the thing they're predicting. And they can't get down to that, like, oh, it makes sense. If I knew everybody's positions, Jim, I could put the mouse on the floor and trade with my toes. We don't know everybody's, but we have a sample size to give us a little bit of an advantage of where we think the market's overbought, too long, too many sellers, the best chance to go down would be in this area. And guess what? If we're wrong, it doesn't matter, because we're good at being wrong, and you manage that risk and you move on. But yeah, and you don't celebrate good trades.
So it's great that you said this. So NinjaTrader's launching, and we have it in Sim already as a beta, a thing called Pulse. And what Pulse does is it goes in and you know, there's a lot of traders that use NinjaTrader, right? So it goes in and it says, all right, here is the net positions in the E-mini S&P. It's 33% more long than short. Or NASDAQ is 17% more short than long. It's like a dashboard. I don't have time to show it to you. I would, but that's kind of looking at real-time positions, not actually order flow, but real-time positions that are open, and it's aggregated it so everyone's data is hidden and all that stuff. You know, it's just all added together, and it gives you this dashboard. We're going to launch that live with live data coming up. Right now, it's in sim mode.
And is it their real positions or sim positions?
Right now it's sim positions, but I don't know when the launch date is. It'll be live positions.
All right. And so now people need to understand how that's going to create the value of trading around that, right? And
Yep.
I don't, yeah. So I think that's again, you're down the path, you're on the right path of being able to find the moments that people get too long and too short, right? But then there's also time constraints. Like, I don't care if people are long and they're going to remain long for the next 3 weeks or the next 3 hours or
Yeah.
3 days, right? Why? Because they're not sellers right now. I need people that are smaller time frame traders that are going to get in and out. You know what I mean? And they're
Yep.
going to put themselves in a position to be a seller pretty soon. Doesn't mean no good, Jim, if you're long, and I know you're long, but you're not getting out for a few days.
Yeah.
And I'm trying to find the people that
Because I'm not putting
cover.
pressure. I'm not putting pressure on the market right now. I
You're
won't
not going
do
to
that
play.
for a couple of days.
You're
Right.
on the bench. Yeah, you're on the bench. You're not You're not going to play for a couple of days, and so you got to put yourself in a position to to know how to use the information. I guess that's the best way to put it.
Yeah. So I was on the bench a lot when I was on the basketball team. I wasn't a very good
I
basketball
was
player.
gonna I was gonna say, yeah, you've probably been used to the bench, but you've done a lot of learning from the bench, I would imagine.
No, not in 7th and 8th grade. No.
No, that's good stuff. When are they coming out? Rolling this out next year? Early next year, rather.
Um, my guess is yes. Like if you log into the web-based platform right now, in simulated live mode, you could see it there. It's called Pulse. The live version, it's going to be available on the desktop and also on the on the web-based. Soon. There are programmers involved, Anthony. I can't, but
Right.
I've been beta testing it. I've got a peek behind the curtain. It'll be sooner than later.
Got it. Could I, this is a video that kind of fits with that. I'll put a link in here or to send to someone. So I know you're going to ask me how could people follow me and
Yeah.
everything else. I've got a link to a video I did just a few weeks ago.
Okay.
That's the best bet for people to watch that. And then go to YouTube and search or Edge Trading Group to also find me. But where would I put this? Just in the
You could do it in the meeting chat
send
if
it
you
to
want.
you?
Just everybody here, and then I'll put it into the. There we go. All right, and this is safe to click on. No one's getting in trouble. All right, folks, I'm cutting and pasting this in the chat.
Thank you.
Let's make
Yeah,
sure I do that
so
right.
watch. So that
Yeah.
link, it's only an hour webinar. It's very practical, but you'll like it. People will like having being on a path that is right. There's nothing more frustrating than people are spending time and money and they don't even know if they're on the right path. You know what I mean? They don't even realize that they're trying to learn to become a plumber, but they're taking classes to be an accountant. And they don't realize that. And that happens a lot in trading. And again, it's not the individual's fault, Jim, because you don't know what you don't know.
Yeah.
And I even took some classes that were irrelevant, and I was at the exchange, right, where you knew that's where professional traders traded. And yet there was still education that was poor. And this was back in the 90s. You know what I mean? So
Yeah.
it's the internet's great because of all the information at your fingertips, but the internet sucks because of all the information at your fingertips.
Your fingertips. You got it. Well, anyway, Anthony, I greatly appreciate you taking time out of your busy schedule to be with us on NinjaTrader Live. Looking forward to the next time we get to chat. And are you on schedule for the rest of the year? Or is this it?
I don't know. I'd have to look back
Okay.
at emails,
All
but
right.
I'll follow up.
I'll tell you happy holidays later then.
My pleasure, Jim. It's always good. If I don't see you guys, have a Merry Christmas, Happy New Year, and we'll talk soon.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.